Hey guys, I didn't know it was on this quick here. It said 8 minutes until published. I just wanted to make this quick market update video for you guys. I'll let you guys know what's going on. Most of you are in the trade room during the day and know what's going on, and those that aren't, I send you guys email alerts when we make a notification. But just wanted to go over. NVDA just came out with earnings, and the stock is soaring. The stock is soaring over 10% right now. We jumped in and we got the 160 strike calls. It was a higher risk earnings trade, but I felt that it was necessary. I had a beautiful chart set up here. We were in breakdown momentum. We had the SMAs crossover, and then we had a nice climb here, and we had the 10 cross above the 20. And then we jumped in the 160 strike calls. We paid $2.65 a contract for those. And NVIDIA right now is at, let's see, 168 a share. So those contracts are going to be worth at least $8 as of right now. I'm expecting it to get to at least 170. So let's just say though it's worth at $8. We paid 265, so 8 divide that by 2.65, and that's a 202% return we just made on NVIDIA. Now it was a smaller trade. It was only a $2,100 trade. But still, that's going to be around a $4,000 to $5,000 profit on that trade. That was a smaller trade, that was a higher risk, but we took a smaller amount of capital and was able to take advantage of that nice chart pattern there, utilizing some regular calls against their earnings there. So also we got, the other day we got into a Google call spread, a vertical call spread. It was closed at the end of the day today. I told members that if Trump's passed that spending bill and markets were happy and we got a rally, that I would hold on to that for maximum profits tomorrow. We got in for $1.25 a contract. Max it could be worth is $2.50 a contract. So we paid $1.25. So the max gain on that was 100% return, being worth $2.50. So we got in at $1.25, and at the end of the day, there's only around 10 minutes left. And I said, you know what? If something happens overnight, I don't want to take that risk of having a small profit now and then risk the market selling off, and then since it's tomorrow's expo, having a trade that's totally worthless. So I alerted members. I said, guys, you know what? I'm not comfortable taking that risk going overnight into Expo Day with this vertical call spread. We do have a small gain on it, so I'm going to lock in those profits. I ended up selling that for $1.50. So we paid $1.25. I sold it for $1.50. That's a small 20% return. But I made $450.24 on that trade. It was just an overnight one-day trade, so it was a quick trade, but like I said, I didn't get that max gain that I really wanted to get on that trade. I knew it was a great trade setup, but unfortunately with the events going on with Trump, the Democrats, the wall, and all that, declaring a national emergency, that pulled things back a little bit there. But we had the 11.2750, 11.30 vertical bull call spread for the February 15th monthly expo, and the stock was above 11.30 the entire day. Last hour there, pulled back down to around 11.29, and I said, you know what, let's just take the profits on that, be on the safe side, because it was around a $4,000 trade, and I said, you know what, I don't want to risk losing that $4,000 overnight, so let's lock in that $500 profit and be happy, exit that, and look for the next trade. So as you guys know, we talked about Johnson & Johnson. They have a new drug out. It's made of the party drug called ketamine, and it's supposed to fight depression, and it works really quick. It takes about 4 hours to kick in. And so far, the trial patients that have taken it said it works fantastic. They notice instant results. And, there hasn't been any new kind of medications to fight depression in over a decade. So this is going to be a big game changer for Johnson & Johnson. So I've been looking at that chart. Let's take a look at Johnson & Johnson now, stock symbol JNJ. And if we take a look here, over to the left, this is a 6-month daily chart. Over to the right, this is a 1-day, 1-minute chart. So over to the left, this is the 6-month daily chart. This is the one I use for swing trades. And then this is the chart I use for day trades. I have both of them linked with the option chain. So if I type in one here, it'll set it up for here, here, and here. And then if I want to click something up here, for example, here's Google up here. If I click it, it changes the screens down here and over here. So that's a really great feature. I love that. Anyway, back to Johnson & Johnson. So she's at 134.02 a share right now. Okay, and it's supposed to be getting FDA approval on that drug on March 4th. So March 4th, the FDA is going to come out and say, hey, we're going to either approve you or deny you for that new depression medication made of ketamine. So March 4th is that deadline. So I was looking at the chart here, and I like either the March 15th or the April 18th monthly expos. And we could do one of two things here. We could either A, go with regular calls and possibly get a really nice return on that of 100 to 300% return, depending on the move it has after it either gets approved or denied for that new drug. And then B, the other thing we could do there is a vertical bull call spread, possibly for the March 15th monthly expo. What we would do for that is possibly do, let's take a look at it right now. Buy to open, sell to open, calls for the March 15th monthly expo. Let's do, the stock's at 134.02 right now, so let's do the 130, 135. So as you can see here, if we bought the 130 strike call and sold to open the 135 strike call, that's a difference of $5. We're paying $3.26 a contract, so 5, divide that by 3.26. Our max net return on this is a 53.37% return. So that's not bad. You could make a 53% return getting this fully in the money, or not fully, it's still about 98 cents away from full out of the money here, or in the money. But you're buying the 130, you're selling to open the 135. Like I said, you're paying $3.26 a contract. Max it could be worth is $5 for a max net return of 53.37%. So like I said, let's say you put $5,000 into that trade, you're looking at around a $2,700 profit. So that's not bad. And all you need then is for Johnson & Johnson to be above 135 a share by March 15th. So on March 15th, as long as Johnson & Johnson's above 135 a share, you make that 53.37% return. That's why options are so great. You know, your money's much more leveraged utilizing stock options. So that's Johnson & Johnson. Now let's take a look at Overstock. That was one that we got the other day, guys. If you can see here, Overstock, we had the 1020 crossover, the 2050 crossover, and she's still been in breakout momentum. She's holding above that 10-day simple moving average, the yellow line I have in the charts there. It's holding above it. It's still in breakout momentum. It's just been stalling there, just climbing a little bit because of the events and news going on in the market. So like I said to you guys, once this stuff gets cleared up, we should see the market start to run. But for right now, that's what's happening in the markets. And unfortunately, it's a news-driven market, so we have to pay attention to the news. And the beautiful thing about that, though, is if you pay attention to the news, you know, and follow the trade plan, you could use our cycles and our phases, and you could make trades based on that. That's how I trade. I use a trade plan for my trading. And as you can see here, here's the channels. I have breakout momentum, the no trade zone, breakdown momentum, and I have specific entries and exits for each of those, and that's what I go on. And I've been doing this for about 10 years, guys. So another one there, Apple. Let's go over Apple too. If we take a look at the Apple chart here, Apple had a crossover. It's been climbing. The chart looks great. Apple, I think this is a really great trade to make. I would do an Apple trade. I would do an in-the-money vertical call spread or a slight out of the money or an ATM at the money vertical call spread, possibly for the March or April monthly expo. I'd probably do something like the 167.50, 170, or possibly even up to the 170, 172.50 vertical spread. So that's what I would look at. And let's take a look quick at the Diamond ETF. And as you can see over to the left here, guys, this is the 6-month daily chart. As you can see, we're still in breakout momentum. Every time I have to keep extending this channel here, it's still climbing within our channel, and we're in breakout momentum. We're holding above that 10-day simple moving average, and I expect this to continue to climb. As you guys know, Trump just signed that spending bill approving $1.3 billion for the wall, and he wasn't happy with that, so he declared a national emergency at the border, and he's going to get that funding he wants. Now Nancy Pelosi's fighting back and saying, hey, if a Democrat's in office, they're going to declare gun violence a national emergency and ban guns. So Nancy Pelosi's fighting back with that, which is, that's been what's riling up the markets here and causing volatility, but it's just a game, and they're playing back and forth. They're playing with each other. Trump always instigating Nancy, and Nancy having a fight back there. So the best thing we can do, guys, is follow our trade plan, disregard, picking sides or whatever it is, because we don't care about sides. We care about making money. I don't care about Democrats. I don't care about Republicans. I care about the markets and about making money. So I'm just following my trade plan. I'm utilizing my trade plan on each of the stocks, each of the equities I'm trading, and I'm finding those buy signals, those exit signals, and I'm following the trade plan for nice results. And like I said, today we closed that Google call spread, the vertical call spread, for a $450 gain, 20% profit. We're still growing this account from the account trade challenge we made, the small account trade challenge, where we started with around $2,600. Turned that into, right now it's at $48,612. Tomorrow this should be around at $55,000 because we do have the NVDA 160 strike calls, and they should see about a 300% return tomorrow with the stock climbing. Stock is now 166.77, up 9.08%. So that's that, guys. That's the Diamond ETF, still in breakout momentum. We have some resistance coming up here right at about, we actually hit resistance the past 2 days here, right around 258. So around Dow 25,800 we have resistance. So just think of this, guys. Once we get a candle up to Diamond 258 or Dow 25,800, that's where I'm going to be saying, hey, we might have hit resistance now, and now we might come back down to that 10-day, possibly break back down even to that 20 or 50-day SMA. So if we test that resistance and we see a pullback there, that's a time to be cautious, because then we might see a pullback and we might see a few red candles there before we start heading higher. So that's a perfect time when you see it hit that resistance and you see a pullback. That's a time to sell for me personally, lock in my gains, and then either switch to the puts using our trade plan, or possibly just wait until the next wave higher, climb higher there, utilizing our trade plan as well. So that's what I'm watching for, guys, on the Diamond ETF. Now let's take a look at the Qs. Qs, same thing, guys. You can see the green channel here. We've been in breakout momentum since January, early January. Actually, to be honest, since the end of December, we've been in breakout momentum. We've been holding above that 10-day SMA for a little period of time. In late January, we came down to the 20-day SMA, climbed above that. We've still been in breakout momentum. So, like I said, now let's take a look at resistance on the Qs. Resistance on the Qs is at around 172, which we hit yesterday. So we may see the markets start to sell off. Tomorrow, if we see the markets red, that's sign to me that next week we may head lower. That's important you guys understand that. If I see a red candle tomorrow on Friday, I'm going to be selling my long calls, locking in my profits. I'm going to be locking in my calls on NVIDIA, locking in around a 300% return. Johnson & Johnson, I'm going to probably sell that trade tomorrow, and I'm going to get something for that March 4th after that to get that FDA approval, and hopefully that pop higher, that move, that volatility I'm looking for. And that's how we're going to trade it, guys. So like I said, tomorrow's a big day. If we see a red candle there, I'm locking in my profits, taking my account, and probably going to be getting some puts next week, some swing trades and some day trades. So it's important now, guys. It's important to watch the markets, watch the trade plan, and you need that discipline and patience to follow the trade plan, and that's what I've been doing. And as you can see, the account's been doing great. So I will see you guys in the trade room tomorrow. If you guys have any questions, feel free to comment below. And for those of you that aren't members, if you want to sign up, use promo code TRADER, all capital letters, TRADER, at thesantorelliexchange.com. Take care, guys. Have a great night, and we'll see you tomorrow.